Good morning and welcome to the Killik & Co Market Update. Yesterday, Mark Carney, the Governor of the Bank of England, gave quite a positive speech about the UK economy, and he specifically mentioned the positive impact of the World Cup. So we're all spending a lot more, mostly in the pub, but also on food and drink when watching games at home, new TVs, souvenirs such as t-shirts, and all of that is adding together to give a bit of a spending boost to the UK economy. And this is going hand in hand with some other positive bits of data that we've had for the UK over the last month. And it's now looking more and more likely that we will have a rate rise here in the UK in August this year. So another positive bit of data that Mark Carney mentioned were the latest PMI numbers. So these are purchasing manager indices, and they're just a monthly survey that asks purchasing managers how they feel about their business at the moment. And normally you would say that a score over 50 is seen as a good thing. The higher the score, the more positive these managers are feeling. So this chart here shows you how the PMI numbers have moved over the last couple of years. So the green bars, they show the forecast level of PMI for that month, and the pink bars show the actual levels. And this particular chart is showing the services PMI for the UK, because services account for about 80% of UK GDP, so they're particularly important for the UK economy. So you can see on this chart that we did have a dip in both the forecast and the actual levels in July 2016, so just after the referendum. Then this year we had quite a big dip in the actual level in March. That was due to the snow that we had, so people weren't going out as much and they were spending less. But in June, so the month's just gone, the results have actually come in quite far above expectations. So that's definitely a good thing. That's why Mark Carney is feeling more positive about the UK economy. And if we stay in the World Cup, hopefully those numbers could go even higher. And Donald Trump this week has caused a bit of concern about a potential oil price spike by insisting that all US allies stop importing oil from Iran. So this could have quite important connotations for the level of global oil supply. So if you have a look at this pie chart here, you can see that global crude oil production at the moment is 99.6 million barrels of oil per day. So that's fairly equivalent at the moment to the current level of global demand. And of that, Iran accounts for 3.8 million barrels per day. So just under 4%, definitely not an insignificant proportion. And Donald Trump has said he wants to drive that number down to zero. So if that 3.8 million barrels of oil per day disappears from global production, other countries will have to pick up the slack. But at the moment, it's thought that the spare production capacity for oil across the world is only about 1.8 million barrels of oil per day. So not enough to replace what could be lost from Iran. So if that does happen, we could have a shortage of oil, and that could potentially lead to a bit of a spike in the price. And this has happened in the past. So if you have a look at this chart here, this shows the spare capacity for oil production in the world versus the price of oil. So the blue bars here show the spare capacity. And you can see that between 2003 and 2008, the spare capacity for production was fairly low, generally less than about 2 million barrels of oil per day. And throughout that period, we did have a steady increase in demand for oil. And as you can see by the brown line, that did lead to quite a significant increase in the price of oil. So the price of WTI crude went from about $40 per barrel all the way up to 120. So now that we've got a potential supply cut because of this Iran situation, there is a bit of increasing concern that the oil price could go higher than it is at the moment. And lastly, we still have no idea what sort of customs arrangement we could have with the EU after Brexit. And today there's a big meeting at Chequers, the Prime Minister's country resident, to discuss this. So far, two proposals have been put forward, neither of which have been particularly popular. The first one was called MaxFac, or Maximum Facilitation, and that would have involved having some new type of technology at ports and borders to ease friction. But we weren't really given much detail on what that technology would entail, and there was some doubt about whether it could be implemented and developed in time. So that wasn't particularly popular, and that was said to be unworkable by the EU. The second option was then called the New Customs Partnership, and that would have involved the UK collecting tariffs on goods bound for Europe and paying those tariffs to Brussels. Again, that was viewed as unworkable by Brussels. Now, we are being told that there is a third option that Theresa May has developed. It's being referred to as the third way. As yet, we've had hardly any details about it, but that's what's being discussed today, and hopefully we will receive some details details about it over the next week. So that's definitely something to look out for. And it is vital that we do come to some kind of agreement about a customs arrangement soon. And over the last week, a number of companies, for example, Jaguar Land Rover, which is a huge investor in the UK, they have been quite vocal about the need to get a customs arrangement in place as quickly as possible. So definitely something to keep an eye on there. Now, moving on to the week ahead. Next week is a fairly big one for US financials. So next Friday, we are waiting for results from Citigroup, JP Morgan and Wells Fargo. That's it from us. Have a great weekend and we'll see you next Friday.